In 2016, we've seen populist politics such as the UK exit the European Union and Donald Trump's win in the presidential election. How will these events impact global markets in the next 12 months?
Well, these are the things to very much focus on because they were the big events for 2016. When you think back, we were all looking to Brexit, we were all looking to see whether Donald Trump would get elected, and as it turned out, both of those events arrived. So if we look further forward, the first cab off the rank is the 4th of December, when we've got an Italian referendum. If we look further forward into next year, we've got a French election, we've got a German election. These things are the things that are likely to have quite a large market impact and certainly could drive a significant amount of volatility in financial markets over coming quarters.
Okay, thank you. Back to Australia. We've seen some slowing in the property market here in Australia. What's your expectation for interest rates here in Australia?
Look, we think that the RBA is unlikely to cut interest rates any further. They've already cut interest rates to extraordinary lows in the scheme of things. We've got a cash rate at 1.5%, and we think there is enough momentum in the domestic economy. We've seen enough of an improvement in the labour market, for example, to get wages growth to stabilise and to mean that the RBA is unlikely to deliver further cuts. Of course, the housing market has been a key driver of the rebalancing of growth we've had in Australia, from a mining investment-led story to being driven by the other parts of the economy. But again, we think the housing market is starting to show signs of cooling, particularly in Sydney and Melbourne, where we've had quite strong house price booms recently.
And finally, in WA, what do you forecast for the commodity prices?
Well, certainly commodity prices are very much the focus for Western Australia. We have seen some improvement in 2016. The iron ore price looks as though it's past its trough. And we do think iron ore prices will be past their trough. We don't think they're going to fall back below $40 a tonne anytime soon. A big part of that story is actually happening on the supply side. So what we've seen is the Chinese authorities cutting back on their own domestic production of low-grade iron ore and instead turning to the international market and buying more high-grade iron ore from Australia. And we think that trend's likely to continue to provide support for iron ore prices.
That's great, Paul. Thanks for your insights and thank you for joining me today.
Thank you.